Hi everybody, this is Patrick Donahoe of Paradigm Life. I'd like to just take a few minutes and go through a pretty interesting exercise. I think that through the holiday season, now we're in 2011. There's a lot of commercials as far as automobile sales, and I think a lot of the marketing around there is pretty intriguing because oftentimes you see an incentive interest rate, and if you look at an incentive interest rate. Okay, they're low. I mean, you have zero. I'm surprised there's not like a negative interest rate, but 0%, 1.9%, 0.9%, and so forth. It's pretty intriguing. So what I want to try to help you understand today is the difference between a cash price and a purchase price associated with an incentive loan. So the way I'm going to do that math is based on, right here we'll use a $35,000 purchase price with the incentive, I guess we can call it, incentive purchase price. Okay, and then let's look at cash. Let's look at the cash price. Okay, so the cash price would be, let's say in this case, $31,000. Okay, so it's basically a $4,000 difference. So basically what I want to show is that even though you have an incentive interest rate, you have an interest cost because there's a premium of $4,000 added to the purchase price here. Whereas if you went into a dealership with $35,000 in cash, looking at what that price would be, around $31,000 is what's commonplace with the different sheets that I've seen, looking at the difference between a cash price and an incentive purchase price. So let's run the math. All right, so I'm going to use a calculator system that I use, which is called Truth Concepts. This was developed by Todd Langford, and their website is www.truthconcepts.com. So let's go in here first off and look at a payment calculator. So what we're going to do is determine what the monthly payment is associated with an interest, a 0% interest rate. So we'll go in here and we'll put an outstanding loan balance, $35,000. We'll put the future value at 0, and let's say that's a 48 month term. So let's go in there, put 0%, and then we'll go and switch to monthly and put 48 months in there. Okay, so here we come up with a needed payment of $729 per month for 48 months, 4 years, in order to bring that $35,000 down to 0%. But now let's look at the cash price. Okay, so I'll bring up another calculator and look at what the actual interest rate would be. Okay, so let's drag this guy down here, make it pretty much the same size. All right. I should just bring down this right there. There we go. All right. So present value, again, we'll put in what the cash purchase price would be, $31,000. Let's put in there a monthly payment, so $729.17. And then future value, let's obviously put 0, and we'll do it for 48 months. And lo and behold, we come out with a 6.35% interest rate. So what this basically shows is that you have to look at the fine print associated with car purchasing. Okay, you see all these different advertisements, but a lot of the fine print is basically what the overall dollar amount is, what the overall cost is going to be of the car. And even though it says 0%, it may come out to a lot higher. I mean, look at, say, the loan. You can go in with cash and buy the car for $30,000. Now that brings it up to 8% as far as the annual interest rate cost. So next time you're looking at purchasing a car, make sure you read the fine print. One of the best ways to purchase a car is with the infinite banking concept. And if this is one of the first videos you've seen, we have several other videos on our YouTube channel and on our blog that basically show how to purchase a car the most lucrative way I've ever seen. You can visit our website at www.paradigmlife.net. You can also give us a call if you want more information, 800-870-8670. That's all for today.